Her name was Diane. Her husband, Robert, spent 31 years as a firefighter. Not the kind of job that makes you rich, the kind that makes you steady. Pension, benefits, a house paid off by the time he was 58. When Robert retired, Diane went down to the Social Security office to ask about her spousal benefit. She'd never worked outside the home. She'd raised 3 kids and kept Robert fed and rested through 3 decades of 24-hour shifts. She figured she was owed something off his record. The man behind the desk did the math and told her the number. 0. Because Robert's pension came from a job that never paid into Social Security, a rule called the government pension offset took 2/3 of his pension and subtracted it from what Diane would have received. In Robert's case, that math didn't leave a smaller check. It left nothing. So Diane thanked the man, went home, and never filed an application. Why would she? You don't apply for a check that's already been calculated at 0. That was 14 years ago. Here's what nobody called to tell Diane. What that man told her was true, right up until January of 2024. It has not been true since. There's a real chance that somewhere between 18 months and several $1,000s are sitting in a system with Diane's name attached to them. And Diane has no idea, because the rule that zeroed her out is gone. And the government does not go looking for the people it once told zero. Let's back up, because what happened to Diane wasn't a mistake. It wasn't a clerk having a bad day. It was 2 federal rules working exactly as designed for over 40 years. Here's the plain version. If you spent part of your career in a job that didn't pay into Social Security, a lot of teachers, a lot of police officers, a lot of firefighters, and federal employees under the old civil service retirement system, you likely still get a pension from that job. That's normal. Nothing wrong with that pension on its own. The problem showed up when Social Security got involved from a different direction, either your own work record or your spouse's. The first rule is called the Windfall Elimination Provision. Most people call it WEP. If you personally worked enough Social Security covered jobs across your life to also qualify for your own Social Security benefit, WEP cut that benefit down, sometimes by several $100s a month, because you also had that other non-covered pension. The second rule is the one that hit Diane. It's called the Government Pension Offset, GPO. This one doesn't touch your own earnings record at all. It touches your spouse's benefit or your survivor's benefit if you're the one collecting off your spouse's work history. GPO took 2/3 of your government pension amount and subtracted it, dollar for dollar, from the Social Security spousal or survivor benefit you'd otherwise get. For a lot of people, 2/3 of the pension was more than the entire spousal benefit, so the subtraction didn't just shrink the check, it erased it. And here's the number that tells you this wasn't a rare edge case. Over 3.2 million people had their Social Security benefits reduced or wiped out by one of these 2 rules. Teachers in states like California, Texas, Ohio, police and firefighters in cities that opted their pension systems out of Social Security decades ago. Federal retirees under the old CSRS system. This wasn't a footnote. This was millions of working families, quietly running a different set of math than everyone else. And here's the part almost nobody clocks the first time they hear this. You don't have to be the one with the government pension for this to touch your household. If your spouse spent a career as a teacher or a firefighter, and you're the one who'd collect a spousal or survivor benefit off their Social Security record, GPO ran through your spouse's pension, but it landed on your check. Diane never worked a government job in her life. The rule still zeroed her out completely, because it was Robert's pension the offset was calculated against, and Diane's benefit it was subtracted from. If you're sitting there thinking, my pension has nothing to do with Social Security, so this doesn't apply to me, hold that thought. It might not be about your check at all. It might be about your spouse's. On January 5th, 2025, that changed. Not adjusted, not softened, removed. The law is called the Social Security Fairness Act, and what it did was simple to say and enormous in practice. It repealed the windfall elimination provision and the government pension offset. Completely, permanently. Both rules, one on the books since 1977, the other since 1983, gone for good in a single piece of legislation that passed with support from both parties. And it didn't just stop the offset going forward, it reached backward. The repeal is retroactive to January of 2024, which means anyone who is still having their benefit reduced or zeroed out by WEP or GPO during 2024 was, as of that law, owed the difference as a lump sum plus a higher monthly check moving forward. The Social Security Administration has already moved real money because of this. As of the middle of last year, they'd sent out more than 3.1 million payments totaling $17 billion to people whose benefits had been suppressed by these two rules. The average lump sum landed around $6,710. Some people got far more than that. Some got less. It depends entirely on the size of the pension and how long the offset had been running. I want to be precise about that average, because precision is the whole point of this video. $6,700 is not a guarantee. It's not what you'll get. It's what the average person in this situation got. Your number could be higher, it could be lower. But if you or your spouse fall into this group, there is very likely a number, and for a lot of people, nobody has told them what it is. If you or your spouse spent any part of a career teaching or in law enforcement or firefighting or working federal civil service before the mid-90s, I want you to do something before this video ends. Drop your state in the comments. Some states ran almost entirely non-covered pension systems for these professions. Others barely touched it. Where you served changes almost everything about whether this applies to you, and seeing which states show up here is going to be useful for everyone watching this. Because here's what nobody's telling you yet. 3.1 million payments sounds like the story is finished. It isn't. There's a second group of people this law was supposed to reach, and the money hasn't found most of them yet. Here's the distinction that decides everything, and almost no one explains it clearly. When the Social Security Fairness Act passed, the administration had two very different jobs in front of it. The first job was easy, relatively speaking. Go through everyone who was already receiving a Social Security benefit, already in the system, already on the books, just getting a smaller check because of WEP or GPO, and recalculate them. Fix the math, send the difference. That's the group behind most of that $17 billion. If you were already collecting a reduced check, the system found you because you were already visible to it. The second job is the one almost nobody talks about, and it's the one that matters for people like Diane. If you never applied, if you were told decades ago, the way Diane was told, that your benefit would be zero, and you walked away and never filed a claim, you are invisible to that recalculation. There is no reduced check for the administration to go find and fix because there is no check at all, no application, no file, no record for their system to correct. Let that sit for a second, because it's the whole hinge of this video. The Social Security Administration is very good at fixing numbers that already exist in its system. It cannot fix a number that was never entered in the first place. If you walked away from that office the way Diane did, thanked the clerk, went home, and never filed, the repeal of GPO did not automatically put $1 in your pocket. It just means that if you file today, the door that was locked in front of you is now open. Somebody still has to walk through it. And this is where it gets more complicated, because there's a fight happening right now in 2026 about exactly how far back that door opens. Ordinarily, Social Security only pays retroactive benefits going back 6 months from the date you apply. That's the standard rule, and normally that's fair. Most people who are late applying were late by choice or by circumstance, not because they were told point blank their benefit was zero. But a group of senators from both parties have formally pushed back on the administration this year, arguing that people in Diane's exact position shouldn't be capped at 6 months. Their argument is straightforward. These are people who were told, in writing or in person, years ago, that filing was pointless. They didn't sit on a valid claim. They were told there was nothing to claim. Holding them to the same 6-month window as someone who simply forgot to apply doesn't match what actually happened to them. That fight is not resolved yet, It's playing out in Washington right now this year while you're watching this. So if you're in Diane's position, never filed, told years ago it would be zero, here's where you stand today. The law that zeroed you out is gone. The retroactive window back to January 2024 exists on paper, but nobody is coming to find you. And depending on how that fight in Congress lands, the amount of back pay you're offered when you do file may depend on documentation you didn't know you'd need to keep. Diane is exactly this person. 14 years since that conversation, no application on file, no system anywhere flagging her name. The only thing that changes her situation is Diane walking back through that door herself. Before we get to what Diane does next, I need to slow down and be exact about who this video is actually for. Because if I let you leave this section thinking every Social Security recipient over a certain age has money sitting somewhere, I'd be doing exactly what I just told you the system doesn't do. I'd be giving you a number without checking if it's real. This does not apply to everyone. It doesn't apply to most retirees, actually. It applies to one specific situation. You or your spouse spent part of a career in a job where the pension didn't pay into Social Security. Here's what that looks like in practice. Teaching is the biggest one, but only in certain states. California, Texas, Ohio, Massachusetts, and a handful of others run teacher pension systems that never paid into Social Security at all. If you taught your whole career in one of those states, this almost certainly touches you. Teach the same number of years in a state where teachers do pay into Social Security, and none of this applies to you. Same logic for police and firefighters. Some municipal and state pension systems opted out of Social Security decades ago. Others didn't. The job title alone doesn't tell you the answer. The pension system does. Federal employees. If you're under the newer FERS system, Social Security was already built in, so this mostly doesn't touch you. If you're under the older CSRS system, common if you started federal service before the mid-1980s, there's a real chance it does. And there's one more group worth naming. People who spent part of a career working for a foreign government or a foreign employer, paying into that country's system instead of ours. That counts too. Here's the number that keeps this honest. About 72% of state and local government employees in this country are actually covered by Social Security the normal way, right alongside everyone else. They were never touched by WEP or GPO in the first place. This story is real, and it's large. 3.2 million people is not a small number. But it is not universal, and I'd rather lose a few minutes of your attention telling you that clearly than have you walk away thinking a rule applies to you when it doesn't. So ask yourself the actual question, not the loose one. Not, am I over a certain age? The real question is, did I or does my spouse collect a pension from a job that didn't take Social Security out of the paycheck? If the answer is yes, stay with me, because what happens next is the part that actually gets you your money. If the answer is no, this specific mechanism doesn't apply to your household, and that's genuinely good news. It means your Social Security was never touched by this in the first place. If you're still with me, here's what Diane does next, and what you should do this week, not someday. Step 1. Go to ssa.gov and log into your personal My Social Security account. If you've never set one up, it takes about 10 minutes and you'll need your Social Security number and a form of ID. Once you're in, do two things. Pull up your payment history and look for anything unusual. A one-time deposit you didn't expect could be a lump sum that already landed without much explanation. And compare your current monthly benefit against what you were getting in early 2024. If that number went up on its own, sometime in 2025, the administration already found you and fixed it. If it's flat, that's information too. Step 2. And this is the one that matters most if you're in Diane's position. If you never filed, if somewhere in your past someone told you your spousal or survivor benefit would be zero and you took that at face value and walked away, the fix is not automatic for you. You have to apply. Go to ssa.gov/apply or call the national number or walk into a local office the way Diane did 14 years ago. Bring whatever you have, your marriage certificate, your spouse's pension documentation, anything showing your spouse's work history. File the claim. That's the only way the system knows you exist. Step 3. If you do file, and you're only offered 6 months of retroactive back pay instead of the full window back to January 2024, don't assume that's the final word. This is the exact dispute currently in front of Congress. If you have any record at all of that original conversation, a letter, a note, even a rough memory of when and where it happened, write it down now while you can still remember the details. And if the 6-month limit doesn't sit right with your situation, contacting your senator's or representative's office isn't a strange move here. This is a live policy fight, and constituent pressure is part of how it gets resolved. One more thing before you go file anything. If this does result in a lump sum landing in your account, that money is taxable in the year you receive it. And, because it's back pay covering multiple years, you may be able to use something called a lump sum election on your tax return, which can spread that income back across the years it should have been paid instead of taking the full tax hit in one year. That's a conversation for a tax professional. Not for me, but it's worth knowing the option exists before you talk to one. Diane is going back to that office, not because someone called her, because now she knows the door that closed 14 years ago isn't closed anymore, and the only person who can walk through it is her. Here's the one sentence that matters more than anything else in this video. A rule that ran for over 40 years, that zeroed out checks for millions of families, is gone. But the system that removed it will not go looking for the people it once turned away. That part is still on you. If this helped you figure out where you or your spouse actually stand, do me a favor and share it with someone who spent a career teaching or in a firehouse or wearing a badge. There's a real chance they walked out of an office years ago being told the same thing Diane was told and never thought about it again. Quick note before you go apply anything you heard here. I'm not a lawyer and I'm not your financial advisor. Everything in this video is educational, built from the current rules as of this year, and your situation has details of its own. Your state, your pension system, your spouse's exact work history. Before you make any decisions, confirm the specifics with the Social Security Administration directly or with a qualified financial or tax professional who can look at your actual record. Subscribe if you want more of these. The automatic rules nobody explains to you, broken down the way they should have been the first time. I'll see you in the next one.